Hey guys, how are we all doing? Got a special video for you all today. We're going to be looking at a few technical indicators and a few other ways of looking at the market. We've got one of the leaders of our Discord community, Crypto Dojo, here with us, Trader Romps. Some of you guys might know. Thanks a lot for joining us today, mate.
No worries at all.
Awesome, great to have you. So, we've been doing a whole heap of work on some of the more advanced styles of trading that are a little bit more tilted, definitely towards the professional style of trader, not so much retail type styles that I typically, would talk about to the public so that we don't, melt too many people's brains. But I just wanted to do a little bit of a deeper dive into a few of the things that we've been working on, especially for, the new course, Market Mastery 3, that we're going to be releasing over the next few months. And so, a lot of this stuff is looking at, different types of VWAPs and trading value areas, market profile stuff, and order flows type techniques. So yeah, we wanted to get Chris on just to show us a few things and, sort of introduce him to you guys as well.
Awesome. All right, I'll share the screen and we'll get into it, hey?
Right.
So basically, we'll just start with a higher time frame analysis just on TradingView here, your normal Japanese candlesticks. Just starting with a 3-day chart here, just having a bit of a look at, we'll look at basically getting a price action as putting it to ranges. So I've got this range from all the way back from May in 21, which was basically built. The way I've sort of built these ranges, got to remember, a range is basically a zone. So this bottom line and this top line and this midline, it can be adjusted as a range evolves, but it can also just be, you'll see when I show you this more of the lower time frame range. I've used bodies basically because I can find more trade opportunity using the bodies, but when I'm on a higher time frame, I pretty much just draw out, I try and get that whole area of range. But I always remember in my mind that the top and the bottom band of that range is actually a zone. So price can pierce through it, it can go under it, it can go above it. So basically deviate above and below. We shouldn't be looking for too much precision when we trade. It's a bit of art versus science kind of thing. It's not always going to be perfect, because if it was perfect, we could just build algorithms to clean up. So we always know there's going to be little tricks that are happening where price will go above and below a range. But getting into it, we'll go all the way back here, just having a look at 21 in May when we had this big sell-off. We came right down, and as soon as basically we came up, we had this buying climax that kicked in here. I pretty much just started my range from that point there. If we look at that now, we come all the way across, we can see that price respected, and we got a retest before we pushed up to those all-time highs. Come back down and retested it again, and then we fell under. We did chop around and wash that top line up a bit. Wasn't the nicest of price action, but nonetheless, when we did actually come back down into 2022 May, we did find that actually, from that point back there, it did become support. And it has continued as of this year. In March, we started hitting into the bottom of it again, deviated above, deviated below, pressed on it again, and then obviously price action went down into that falling wedge structure that Dax has mentioned. So we can also look at another range that formed as we're moving down through June 2022. Same thing happened. We hit that low. So when we're basically building a range, all of this price action within inside this area here, it didn't exist at the time. So this range didn't really exist. The range probably could have been evolving with curiosity as we went along of, was it here for a little bit of time maybe, then to here, then to here. But once we had this big sell-off with this imbalance and this FVG came in, that was more of a clear sign that we've probably topped out now. So we've probably got a defined range that's actually happened, as we can see here. So going along from there as well, we can see during this time here, this is when a lot of people were getting bearish. They're calling 10, 12,000. And we won't go into it today. I don't have a lot of time, but on a lower time frame, I can show how I actually did buy the bottom here. And it wasn't too complicated. It was really just using things like the weekly RSI and that sort of thing that was giving me the heads up that we had some bullish divergences. But if we look at this little area here, we had this deviation of the low. We tried to get above, but as soon as we did kick above, back inside this range, didn't even get a retest. It was just off to the races, straight back and up and respect this top line again. So what I'm basically saying here is, if we sort of, like I mentioned before, if we do look at these sort of areas through here where we'd say, looking at the hindsight, we won't even mention any sort of trading that happened in here. But once we had an idea of where the range was, if we go based off, if you've done the free course, which you can find in the Crypto Dojo, you'll find that I generally like to look at prices within inside this basic premium and discount range. So basically we've got right down the bottom, I'll just flip these around so it makes more sense here. So basically anything in that sort of discount lower area we want to be buying, and anything above the into the premium is where we want to be selling. Or if you're using perpetuals, we want to be going long or going short in those areas. So if we just stick by this rule, the hard part is patience, because a lot of people, they get on the low time frames or they're sitting flat, they're not in a position and they want to be jumping in and they want to be, you know, making things happen. But if we can just wait for us to get to these sort of areas here, like this second deviation from the midline of that range, we can see that there was a trade here, but obviously all of this area here at the time, just going based off this low, we know that we were below the low. Yes, we could have legged down again, so it's completely understandable without other technical analysis to know too long there. But nonetheless, when we started, by the time we built this up here, we definitely had a defined range. And with that defined range, anything under the 50 is basically for going long, and anything above at the time is for going shorts. So if we zoom in, basically, we understand how those ranges sort of, how you define these ranges now. We can see that what we did here was we broke up and we imbalanced up. We tested into the top, into this bottom of this range, and we came down and we got that beautiful retest, and that gave confirmation again for us to push up, and now putting this another range in the top here to potentially move up further again, like at the moment moving up to this mid-range and then moving up into a premium range. But this alone, this price action, we will discuss our long-term VWAPs and how we can get some levels and a little bit of further understanding of basically putting some lines in on these charts that are more based off volume and not just sort of putting lines in based off price action and ranges. So this is the 3-day, and you can see how we've got this respected range that we're entering back in. We've got this old range that we've retested and we've moved away from now off that falling wedge. And we just click through some of the timeframes. A few other little things, like I'm big on, and DAX as well, we're big on like order blocks and a few of these smart money concepts. And we do look at the monthly, something to be aware of is there actually is, now that we've got that previous monthly close, we actually do have this order block that's sort of gone in here now. And that's just something to be mindful of, that price might want to come down and give that a little kiss before we move up even higher. And then we just move down through some of these timeframes here. So weekly, basically not a lot. There is a weekly order block over through here. I do have it on another chart, but I'll chuck it in now anyway. And this weekly order block over here is something else that we're sitting on top of and bouncing out of at the moment.
Yeah, it's a really important one, that one.
Yeah, so I'll just get a little different color so you guys can see which one that is. I've chucked that color on it there. So yeah, that weekly order block as well is actually currently been flipped. It was a bearish order block that has held price down, deviations above, got a bit messy. But again, we're sitting on top of it, and we're also sitting, if I jump on the daily chart, we're also sitting on a daily order block. So there's 2 order blocks here currently that are supporting price. So basically, when we're in the lows of this, to be shorting, it's just silly, essentially. But at the same time, I'll explain why going long in this range as well at the moment. But going long off the lows is fine, as we've discussed before. Going short off the highs is fine. But anywhere inside of this mess, this child, going long or short is really not an optimal trade that you're going to be having. But yeah, so we've got the daily, that weekly level at the moment. And then we've also got this range. So how I like to define these sort of lower term time frame ranges based off the 4 hour, sort of where I start, unless I was doing something like the 3-day where I'm looking really historically at price action. But if we look at this 4 hour here, you probably think to yourself, oh, what's going on? You know, like I initially my range was actually, when the range began, it was more sort of based around here, and it worked for a time. But as I said, as time goes by, you can evolve the range a little bit. And at the moment, I've gone based off the bodies, because if I am doing some scalps or building campaigns to go long and short, what I'm actually doing is I'm using these bodies on the higher time frame. But when I do drop down to a lower time frame, it gives some really, really clear pullbacks basically that you can look into. So like here's one for an example. I actually use order flow and exo charts. So I was able to short this range up here around the 31,400, actually maybe a bit higher, 31,490 mark. I think I got in a bit higher due to the fact that I've got order flow that allows me to get those really tight entries with size. But nonetheless, if you were just looking at this with price action, we see that we've ran the high of this range that's been defined and had a retest before. So it's not like a hindsight thing. You could have sat out this whole time and then finally gone, all right, well, I know this is a point of interest. And basically what ended up happening, for those who've done the free course, you would have heard a bit about the FVG, the smart money concepts, where this big thrust candle down on displacement. And as prices come back in, we had two things that happened here. We had the fair value gap, but we also had the range high. And basically the moment that rejected off that would have been a clear sign for you to get short off that area there. So Dax, did you want to add any questions or anything about this range at the moment that I've got here?
No, I think you're on point. I mean, probably the only other thing to mention would be the previous year value area high, but I think you might be.
We'll get into that. I'll jump into that. I'll try not to take up too much time. For those wondering as well, this overall market profile composite in Market Mastery 3, we will be covering market profiles, and basically what that is it's volumes, it's levels based off volume. So instead of it just being a range, we're going to have different blocks. Like there's a 2-day composite further up here. This isn't exactly perfect, but we have these areas where we can sort of measure where you can see just in this box where price is more.
Do you have your TPO chart open at the moment?
What's that? Do I have it open?
Do you want to just quickly flash it up on the screen?
Yeah, I can bring it over. And let me just move.
So this is what it looks like in the back end of the TPO chart, guys. So
yeah, so this is your market profile, and what we can do here is these are all day sessions, and you can click on an area and you can merge profiles together. And without spending heaps of time and going through and merging all these profiles together, you can see how then it will define one big value area, giving me a low and a high value, basically of 68% of the volume. So basically these levels based on volume is what's going to give me these sort of areas, not just based off putting a box around a range. But yeah, so what I've done here is I've made the composite value area high and low of a lot of these profiles here. This is a 2-day profile, and this is up to a 2, 4, 6, 8. This is basically an 8-day profile through here. And then we've got this one, like, again, in Market Mastery 3, we'll explain the rules of when you can and when you can't merge these sort of things. But you can just see that I've got these different profiles, and I can basically measure as to, I can be looking, going, oh, look, price is above this one here, but we're inside this one here, but we're below this one here. So what am I going to do? Am I going to take a trade to try and go through here? No, because I've got this profile here that's going to be resistance. Am I going to short here right now? No, I'm not, because I've got this composite that I'm above. And so what am I going to do if I'm not in a trade? Nothing. That's what I'm going to do. I'm going to wait for these inflection points that are really clear. And what I can tell you about this profile here currently and everything happening is it's going to be the same as what I'll tell you on the naked price action. And that is simply, we're just waiting for the extremes of the range. We're waiting for these edges. So again, if you're looking to take your longs down here and your shorts up here at the moment, it's just a smart thing to do. We're just looking for that. What you can do is you can take a long, then you can take a bit out at the mid-range, and then you can target the top, and you can leave a bit on in case we break out. That's a way that I like to trade myself. But at the moment, while being range bound, a lot of the time, you will find that you will just consistently bounce off these lows and you'll be bouncing down out of these highs. So you can just continually take trades. And then what you can do though is, if the market is nice to you, you'll get something where you'll eventually you'll close flat, then the price will come back and it'll retest somewhere above, and then you can get long, and then you can aim for the imbalance higher, the markup. As Dax said, so we'll talk quickly about this here. And basically what this is, it's long-term volume weighted. It's long-term VWAPs. And what we've got here is we've got the yearly. So this VWAP through here is a yearly. We have a quarterly here, monthly and weekly. I've gone ahead and I've added a few, I've actually, like the TPO, I've added the high and the low and the point of control, which is known as a VWAP when we're using LTVW, long-term VWAPs. But it's basically the same thing as market profile, volume profile, and VWAPs are all very similar, with the 68% of value and the standard deviations, which again, this is going over your head. Market Mastery 3 will slow down. We'll actually explain a lot of this stuff. So we look at the yearly at the moment, and this was covered in Dax's video yesterday. He said that if we do break, we're currently at the yearly value area high. So this yearly value is based off 2002, but we have this box here, which is based off 2001's price action. So if we do move above here and we do politely get a nice retest, which so if we come up and we get something like this, somewhere in this area here, which would be very nice of it, we can take along and we should very, very quickly move to this area here. And if we actually just look at the price action, we can actually see, besides some fair value gaps and that sort of thing, there's actually, it'll move quite quickly. But if we look at this as smart money concepts, this is actually a low resistance run, because we've had these highs that are just like this. We have a lot of stop losses. And what it tends to do is it tends to ignore, it ignores FVGs and that sort of thing, and it aims for the highs, because every time it gets to the next level and all these stop losses take out, it's liquidity and it just keeps pulling and people are getting liquidated and it just keeps squeezing and squeezing. So because of that, I would tend to say that this area here is sort of where we'll get to, whether we get here and we reject, and then we can make a new range in here, we get in here and we screw around for a bit, deviate below, anything like that could happen. Very similar to any other range that you'd look at. So what I want to show you though is these levels, this yearly level, it's weighed the same as any time frame. Like the 1 minute is compared to the daily, 1 minute just gets smashed and it's very messy, whereas the daily levels are more important. And the weekly level is 7 times more as strong as the daily level. So we look at this yearly value, we nearly hit it here, which is a bit of a trap because a lot of people would have had their take profits here, and obviously they probably got stopped out here and that sort of thing. It's what the market likes to do. But we're looking at this high here now as this big yearly level that we're struggling to get through. I just want to quickly show you my Coinbase chart. I use perpetual Bybit, so I tend to, so I can get my levels, I just sort of stay on the perpetual chart, but the Coinbase has more history. And I want to show you from back at 2019's same yearly value area high. What we actually have is we attempted it and we had this huge sell-off. Now, to be fair, we did have COVID, so we'll sort of ignore that. But nonetheless, when things did recover and we got back above the developing value, we did sort of smash into it. We finally got above it. We got that really polite retest. But even then, we had a lot of people that didn't fully think we could go higher. And for a lot of time, we had that really, really messy sort of a range that we're getting now. So we do have a look at that little range now, like just in that area. We sort of got the reverse of it because we're underneath it. Say we have a lot of wicks to the bottom holding it up. Well, if we actually look, I'll jump back over to this is probably a cleaner chart, just have a look at quickly. We have the same sort of thing happening here, a lot of wicks underneath it. So it just shows you where this is sort of an area where it's not a place to just inside the center be taking longs. You need to be quite methodical. If you're going long here, you need to make sure that you're going long in a place that you can get away with very little loss, because we could just continually butt into this and then eventually we could just roll over. There's nothing saying that we can't roll back over to this developing value area through here. We've got a couple of fair value gaps. We've got this point of control here. So I've even thought to myself, we could simply just get, a lot of people are calling for that 27, 28K. They want to come down to this lower FVG, which has a little bit more of a breaker block. And you can see the dual volume here. A lot of volume is traded in here. So these are sort of magnets. And, we put the confluences together, developing value area. We've got this fair value gap. We've got basically this breaker block in here. So this is an area that would say, well, hey, we could definitely, come back down and move back up again. But this little point of control here at the same time could be, which is where the most volume coming up here was traded. A lot of traders out there will set their stop losses at break even. So we could very easily just come down and just have one little quick sweep, and then we could work our way up with the expectation of everyone calling way lower. They're going to get front ran who are sitting on the sidelines. And this whole move as well, a lot of the pain from this move has actually been caused by people on the sidelines, people missing out. People were calling for lower. So unless you got in sort of down in this area here or this area here, I remember only weeks ago, people were calling for lower when Dax and in the Discord, we were discussing, we were waiting basically for this falling wedge to actually kick off. But there was not many people bullish. Everyone thought it was cooked. Everyone thought we were going to go lower again. And well, look, here we are now, again, actually finally hitting that target of I finally closed a long out at the previous year value area high. And that's just sort of what we do. It was a destination to be able to get up to that level there. So just going over, that was basically, you can, as Dax said yesterday, we're at that level. If we do get through it, we'll go back up to the yearly value area high. If we do reject off it, then we can definitely rotate lower. But we can also look at the quarterly value area, which on some exchanges we have hit, some we haven't. But you can see we got a perfect little tap off that. So these levels based on volume can be a lot stronger than basically just setting a range here. And again, we've got the monthly as well, which we've hit into a few times now. So we've got a few separate areas that we've showing that last month's value is not willing to accept prices. So this is another reason why we can literally just pinball between this high and the quarterly, but also the monthly. And that's the thing. People said, oh, where's it going to go? Well, for me at the moment, we're just range bound between these sort of areas through here. And that's what we're going to do. We're going to just continually trade this range until it breaks. That's probably the smartest thing to do. So every time we hit into these lows, we're going to take a long, and every single time we hit into these highs, we're going to take a short. And so far, that's working out pretty well. And how we got on time, Dax? We gone a bit long.
Yeah,
we've got a quick moment to explain how these value areas work.
Yeah, it's fine.
Yeah, cool. So basically what happens is when we get acceptance inside an old value area, we can rotate very, very quickly to the other side. So we'll see that this is basically where Monday, this is the new week, started. We were below the value. So at the time, we're in this range low. What do we do when we're in a discount? We go long. And so we had a little bit of resistance starting off in Monday. When the range low, so it's plenty of reason for you to be looking for longs. I got a long myself down in this area. New York gave their little famous Judas swing where they try and stop a lot of people and get lots of shorts, lots of liquidity in here. And then we've come back inside it. And basically the way the rule works is once we accept, and sometimes we get a retest, sometimes we don't, sometimes the retest higher. But once we accept inside a value area, we expect a rotation back up to the opposite end of the edge. And that's just it. Now, there is this point of control, the VWAP, which you can see already with the current price action. It is respected. I won't go through the different rules and the things to be watching for, but we can obviously get in. We can take profit if that's something that you want to do as a trader. It's not a stupid thing to do, but we are aiming as a destination to get in here. And then we're not looking for a short on here. We generally want to, on perhaps a lower time frame, we would have found something in here. I do have some levels up. We don't have time to go into how you would have found to actually be able to short this. But nonetheless, that's what we're looking for. And we had it on the monthly as well on this one here. And that was last month. There was another trade. So it wasn't in this value. It was this value in here, which is basically, let's quickly make it a color that stands out a little bit. I'll make it yellow. And this was actually a nice monthly rotation that we had because it gave a really, really clean retest. So again, we're trading underneath the monthly value. We came in, we got that really nice retest here, and we rotated. And not only did we rotate to the other side, but we continued on. But nonetheless, you're not going to be upset if you were to get in on a long position based off that retest. And at the time, you could have got in lower, but let's just for argument's sake, say you got in somewhere there and you only rode it up to there, and you're still looking at an 18R move, which is pretty cool.
Very nice.
So yeah, that's basically how using just naked price action with ranges, but also using this long-term VWAP, looking at your weekly levels for more execution and lower time frame. But we want to be keeping an eye on these lines of the sand. So basically, what are we looking at the moment? If we did fall back into this, the monthly and previous month and previous quarter, and we do find into it, I'm looking for something very, very quick. I want something to get in and get back out. I don't want to fluff around, because the longer we fluff, retest, then we can definitely be looking at rotations back down to these lower areas here. And hell, anything can happen. So that is still a possibility. So we trade. We don't trade what ifs, we just trade what we currently see. And what we currently see is a ping pong between the previous yearly value area high and a very clear one between the previous month value area high as well. And until that breaks, I'll be trading it backwards and forwards. Cool.
Yeah, I think a pullback to that 28K level where the previous quarter VWAP is.
Yep.
There's a few nice levels in there that would make a lot of sense to come down there, sort of hit like the 50 fib level as well, and then, reclaim that 30K level, and then then it opens up to the 35K push. I think that'd be a really nice trade.
Absolutely. Pushing straight up into here. Cool, cool.
Brilliant, man. That was great. Thanks for the knowledge dump. Thanks a lot for tuning in, guys. Make sure you give Romps a follow on his Twitter. What is your Twitter handle?
Trader Romps.
Trader Romps. I'll leave it in the comment as well, so you can check in there. And he'll probably drop a comment below the video as well. So thanks a lot for tuning in, guys. And we'll see you all in the next video.
Awesome. Cheers, guys. Sweet as, man.